Hello everyone, myself Rashid Ashar Qadri. Let me begin with a simple but powerful thought. Every file we sign, every sanction we approve, every procurement we process is not just a paperwork. It's a public money, it's a taxpayer's trust, it's a national responsibility. Financial rules are often seen as a restrictions. ये माना जाता है कि वो restrictions पैदा करते हैं, but in reality they are protection. They are protection of misuse of the taxpayers' money, protections against misuse, protections against irregularity, protection of our integrity towards our nation. GFR 2017 was not introduced merely to change procedures. It was introduced to change mindset from casual spending to accountable governance, from manual discussion to digital transparency, from process following to value for money thinking. As a financial administrator, and decision makers, we are not just custodians of budget heads, but we are custodians of public trust. Today's discussion is not about memorizing rules, it is about understanding why these rules exist and how they empower us to take confident, transparent, and responsible decisions. Because ultimately, strong financial governance build strong institutions, and strong institutions build a strong nation. Let us explore GFR 2017 not as a rule book but as a tool for better governance. Before GFR 2017, there was GFR 2005 earlier. To change some things from that by the Department of Ministry of Finance and the Department of Expenditure. Uh, it was 2005 GFR reviewed in context with the informations and advices received from the various ministries, from procurements organizations, from other business entities, from the audit departments, etc. These DFR 2030 come into exist to build a nation, to give the governance over the finance of the taxpayers money, how this it should be expand that it may be used or utilized as much as possible. Today we will discuss about the chapter number 3, the budget formulation and implementation. There are various chapters in the GFR 2017, but today here we are going to discuss about the budget formulation and implementation. Uh, this is a comprehensive guide regarding the rules governing India's budgets, preparation, presentation, and expenditure management framework. Let's begin our journey. Myself Rashid Qadri from Zarasa Solutions, a track of learning. Continuously मैं आपके सामने वीडियोस लेकर आता रहता हूँ. अगर आपने मेरे चैनल को अभी तक सब्सक्राइब नहीं किया है तो काइंडली सब्सक्राइब इट एंड फॉलो मी, और अपने जो है क्या कहते हैं लाइक और डिसलाइक मेरे को देते रहें ताकि मैं मोटिवेट होता रहूँ इसी तरह की वीडियोस आपके समक्ष लाने के लिए. Let's continue. There are various rules in the chapter number 3, budgets formulations related for chapter number rule number 42 to rule number 70. Start with the rule number 42, that is the financial year. It tells about the government's financial year begins from the 1st April and ends with the 31st March of the following year. For example, for the 26-27, that will be April 1st, 26 and will end at the March 31st of 27. Rule number 43 tells about the presentation of budget to parliament, that every budget should be presented to the parliament to get its approval from the parliament, and after the discussion in the parliament, this annual financial statement. The finance minister presents an annual financial statement that is called the budget before parliament, showing estimated receipts and expenditures for the upcoming financial years. It is to tell here I will tell you the railway budget was integrated with the uh, general budget in 2017-18. Before that, the railway budget was presented just one day before the general budget presented to the Lok Sabha. So In the constitutional framework, budget preparation adhere to articles 112 to 116 of the constitution. budget preparation जो है क्या कहते हैं वो आर्टिकल 112 और 116 के अंतर्गत जो है कॉन्स्टिट्यूशन के अंतर्गत प्रेजेंट किया जाता है, बनाया जाता है. दैट्स इट रिक्वायर्ड द approval of the Lok Sabha and Rajya Sabha, that means Parliament. The Ministry of Finance issued budget preparation guidelines to all ministries and departments to prepare it well before presentation so that it can be included in the annual financial statement of the Government of India. Uh, Rule 44 tells about the contents of the budget. The budgets must include revenue estimates, estimate revenue for the financial year that can we are going to be earned, expenditure estimates, estimated expenditure for all program and projects, debt servicing, estimate for the interest, debt servicing, and loan repayment. Additional information, other prescribed information is required. It is to be submitted by the all the ministries for their departments under the for their departments. Rule number 45 to 46, receipt estimates and non-tax revenues. Rule number 45 tells about the receipt of estimates. Revenue estimates are prepared for each major head with detailed breakups of past 3 years data. For past 3 years के उस last past 3 years एक्चुअल क्या रहे और एस्टिमेटेड क्या है और फ्यूचर फाइनेंशियल के लिए क्या होंगे. Significant revenue items must be highlighted and major variation must be justified. Rule 46 tells about the non-tax revenue. Non-tax revenues are collected by the various ministries, departments, and are a crucial source of the revenue for the government. In context with the railway, the fare, freight revenue, and other sundry revenues are collected by the railway itself. Then it is to be transferred to the consolidated fund of the India. It is apart from the taxable revenue. Taxable revenues are income tax or other taxes like GST, etc. Rule number 47 to 48 that is told about the user charges and dividends. Rule 47 tells the user charges. Ministries must ensure user charges, services, cost with a reasonable returns. Charges should be linked to price indices and reviewed every 3 years. All the user charges, those are uh, uh, levied on the users. These should be reviewed in every 3 years. Dividend and profits, timely payment of dividend from public sector enterprises is essential and must follow guidelines issued by the DIPAM. Rule number 49, this is called tells about the receipt portals. Ministries must adopt the online e-receipt portal for convenience, immediate credit of non-tax revenues. It is used for that is expenditures estimates are prepared under the rule number 50. The charge and voted expenditure. Expenditure estimated including charge and voted expenditure under article number 112 of 3 and 113 of 2 of the Constitution. Revenue and capital accounts. Estimates must distinguish between revenue and capital accounts. Past liability must be accounted for in the estimate so that that can be cleared or in the future next financial budgets. Rule number 51 and 54 tells about the demands for grants and budgets documents. Rule number 51, the demand for grants. Expenditure requiring Lok Sabha approval is presented as a demand for grants for Indian Railway, that is 85, 83, 82, whatsoever maybe. Large ministries may have multiple demands also. Uh, each government department, each central ministerial department has its own demand number, or that is called demand for grants, under which the grants are sanctioned by the Lok Sabha, by the Parliament after the approval of the President. Form of budget documents. The Ministry of Finance prescribe the format of the annual financial statement and demands for grant. How will the financial statement will be prepared, in which form, what will be the requirements of the budget presentation. That's it. Rule number 53, scrutiny of estimate. The budget division scrutinizes and finalizes estimates considering pre-budget discussion with the ministries and department. The budget division that is comes under the department Ministry of Finance and uh, discuss the estimates with the concerned ministries and departments to before finalization of the budget and presenting into the Lok Sabha. Rule 54, that is outcome budget. Budget allocations must be linked to measurable deliverables and outcome that we learn about, or we have listened already about the outcome budgeting, that is influencing schemes, continuation and allocations, that is governed with the Rule 54 of the GFR under the outcome budgets. Rule 55 tells about the vote on account. If the appropriation bill is not passed before the financial year starts, a vote on account may authorize temporary expenditure. It mostly happen when there is no parliamentary sessions available due to dissolution of the Lok Sabha. Then the vote on account is passed. Distribution or for the complete financial year budget cannot be presented in the parliament, then vote on account is passed. Distribution for grant. The Ministry of Finance communicates approved appropriations to ministries for further distribution to subordinate formations of the approval of budget, or the act has been passed by the parliament. The distribution of and the approval appropriations approved by the President of India, then these grants are distributed among the ministries for further distribution to their subordinate formation. In the context of the railway, it is given to the distributed to the Ministry of Railways, then Ministry of Railways distribute them to the other zonal railways or production units, etc. comes under them. Rule 57 tells about the expenditure control and reconciliation. Definitely, when Lok Sabha has sanctioned the uh, budget, it will require to be that expenditure should be controlled to give its progress its result or reporting to the parliament. It's necessary the expenditure control and reconciliation should be done. Expenditure and control ministry are responsible for controlling expenditure within their sanctioned appropriation. What are the sanction budgets are being given or distributed to them. Expenditure exceeding the grant requires supplementary approval. If the expenditure exceed, it's required the supplementary approval that is done through the revised estimate. Monthly reconciliation, head of the departments and account officers are jointly responsible for monthly reconciliation of the accounts in the railways. We did it from the account current. Bill register maintenance. DDOs maintain a bill register in the form TR28A to track payment and adjustment done during the month, each and every month or every year. Expenditure statement. POs provide monthly expenditure statement for DDOs to reconcile with their records. Quarterly certification. Heads of the departments provide quarterly certification of reconciled figures. It is part of the expenditure control and the reconciliation of the expenditure with the Ministry of Finance. Central Government Department consolidate departmental expenditure figures, inform GFR 8 for monitoring department, track physical progress and financial status of the schemes, reporting discrepancies or shortfalls. A broadsheet of GFR 9 is maintained to monitor return, submission and address defaults. So it's the Rule 57 for the expenditure control. Rule 58 tells about the liability register. As we know, being a finance department, we all know that the liability registers are to be maintained as per the Rule 58. Liability statements in GFR 3A are submitted monthly from October to ensure expenditure control. Each executive officers who hold the budget, its budget, should maintain a liability register in a way that and at any time of any time of the year, uh, he can available he can present the status of the budget available with him to expenditure for expenditure. Rule 59 monthly estimation. Heads of department controlling officers regularly estimate saving access for corrective actions. It is done in the railways through monthly financial reviews by the FANCO or PFA. Rule 60 expenditure responsibility. Head of the department oversees grants appropriation control, while account officers report disproportionate expenditures. Excess expenditure. Account officer requires chief accounting authority's approval. In Indian Railway, it is a PFA for payment exceeding budget. If we are going to exceed the budget limits, then financial advisors ensure funds availability via reappropriation or supplementary grant. That is Rule 61. Saving management, Rule 62, unutilized funds are surrendered to the Ministry of Finance Ministry before year end. Saving are surrendered promptly when foreseen. Rush of expenditure in the year's final months is avoided as a financial breach. Quarterly expenditure plans are followed. It is observed that end of the year or the last month of the year, that is February or March, it is seen most of the expenditure is done. Sometime it is approximate 20% of the budget is realized in the last months. It's February and March. It should be avoided because it is known as the financial breach. Rule 63.7, new services and funds management. New service expenditure on new services not in the budget requires supplementary grants or contingency fund advances. Expenditure on new services not in the budget requires supplementary grants or contingency funds advances. New services that are not included in the budget at the time of the sanction of the budget or sanction of the appropriation, then these all the services are required supplementary grants through revised estimation or the if available contingency funds on advances, then these services can be completed by them. Additional allotment, excess expenditure requires prior approval and additional allotments. Disbursing officer cannot authorize payment beyond allocated funds. Additional allotments, excess expenditure requires prior approval and additional allotment disbursing officers cannot authorize payment beyond allocated funds. Rule 65 tells about the reappropriation. Reappropriation means that the funds can be reappropriated within grant limits under a specific condition. Reappropriation requires documentation in GFR 1 and approval from the competent authority. Reappropriation means funds already available for expenditure on the uh, for one item is to be redistributed to the other item for which the funds have been left. Supplementary grants necessary when saving are insufficient or for new services, the expenditure can be asked from due to through can be distributed through supplementary grants and can be asked in the revised estimates. Contingency fund used for urgent unforeseen expenditure requiring timely advance approvals. This falls under the rule 67. Rule 67 supplementary grants and rule 67 contingency supplementary grants are received through the revised estimation. Rule 60 is inevitable payment and account of inevitable payments are government dues must be paid and liabilities are anticipated in demand for grants. Whenever the requirement of budget is submitted, it must be uh, seen that all the liabilities those are going to be those are anticipated uh, should be included in that particular requirements. Account officer said procedures for the ensuring expenditure aligned with the provision of funds are outlined in appendix 10. It must be seen that procedures for ensuring expenditure alignment with the provision of funds. That means funds utilization in a way that the funds those are being provided or appropriated for the expenditure are not access from expenditure not be accessed from them. Rule 70 tells about the authorities duties. Chief accounting authorities in state of relevant is a PFA. The duties of the accounting officers, what are the financial management oversight, oversee financial management and compliance with regulations, effective use of public funds, whether the public funds are used in an effective way, ensure effective use of public funds and intended purpose, because as we know that our the canons of financial properties are here to see whether the expenditure is done in the accordance of the requirement. Program monitoring, monitor program for achieving objectives and maintaining financial records. In a such a way, management of the financial management should be done in a way that it can be monitored at any time of the year in the on monthly basis. Monitor program for achieving objectives and maintaining financial record that we are achieving what we planned before the budget appropriations. Parliamentary representation represent the ministry department before parliamentary committee. Procurement fairness, enforce procurement fairness and efficiency. I'm just here telling about the duties of the financial advisors or FNCOs in Indian Railway. It is done by the PFS. Procurement fairness, enforce procurement fairness and efficiency, expenditure control, Avoid unauthorized, irregular, or wasteful expenditure. It is done by the finance department at at the time when the proposals are concurred or weighted before expenditure, and it is also done by the financial advisor at the time of uh, passing the bill by the through the internal scrutiny, that any expenditure is not calculated or bill are not passed over the requirements. This is what we are discussing here, the GFR 2017 chapter 3 under regarding the budget. Thank you for joining me here. I'm Rashid Ashkadri, Zara Solutions, and thank you so much.